Hi, everyone. Arena 9, and thank you for joining us. The Dow ended the day 800 points in the red. Fears of a recession fueled the sell-off. Yahoo Finance reporter Brian Chung is in New York City and joins us now. So, Brian, what exactly sparked the sell-off today?
Hi, Rena. So it's a little bit complicated, but really what this is about is the inverting yield curve. This is the measurement of where the 2-year bond trades against the 10-year bond. When the 10-year bond dips below the 2-year bond, people say that investor sentiment is not so great in the future and might spell a recession in the future. So to back up, this is a pretty good indicator, has a pretty solid track record of predicting recessions. In the last 7 recessions going back to 1969, it has predicted all of the U.S. recessions within a lead time of about 8 months to sometimes as long as 2 years. So it doesn't necessarily mean that a recession is right around the corner. But to explain the mechanics just for a hot second, basically the bond markets measure money that's being taken off the table in other investment classes like equities, for example. So you actually see bond yields come down when there's more demand for those types of bonds. What we've seen is that demand for the 10-year bond was higher than for shorter-term treasuries. That means that people are not so optimistic about the short term, hence why it spells maybe a recession coming sometime in the future.
Is there a sense of what sort of might be gauging this pessimistic viewpoint on Wall Street at this point?
Yeah, well, this is categorically a pessimistic view on Wall Street. So again, as I mentioned, it seems like some of the steam being taken out of the equity market has a direct correlation to what we're seeing in the bond market because people are taking money out of those equity investments, saying that the stock market is just too dangerous for the time being, and then pouring into what they perceive as risk-free, relatively risk-free, rather, safer treasury investments. So this is, again, a bellwether of a recession. But keep in mind that the yield curve itself is not a cause of recession. There's nothing underlying the mechanics of this that would explain why we should expect a recession to happen tomorrow or the day after. But it's rather showing that investors are a little weary about what the short-term prospects in the U.S. economy look like, hence why they decided to move those asset classes from equities into bonds for the moment.
So when you talk about the global economy, is there a sense of gauging when this could really happen when you talk about a recession?
Yeah, so Bank of America Merrill Lynch actually had some pretty interesting research on this, that typically a yield curve inversion precedes a recession by between 8 months to 24, maybe 48 months. So it could be as long as 2 years before we actually see a recession. Important to note that when we look at the last episode for when the yield curve inverted, it inverted at the beginning of, or rather at the end of 2005 into the beginning of 2006. And there were episodes where the yield curve continued to kind of flip above and below negative until 2007. That was the last time that we saw the yield curve inversion. And then, as you know, the financial crisis really hitting in its hardest form in 2008. And another important thing to note is that based on the yield curve dynamics, it's difficult to tell if there were to be a recession, again, if there were to be a recession, how hard that would kind of impact. So we've had recessions in the past that have not been as bad as 2008. One reminder being the dot-com bubble, also the oil crisis in the 90s. So it's not necessarily a foretelling factor just because we got a yield curve inversion today that will get something as hard hit as 2008. So not necessarily a reason to panic immediately, but it does just signal some sort of market concerns that we need to be weary and careful, cautious about what's going forward.
All right, much to watch. I want to thank you very much, Brian Chung, for joining us.